let's talk about the massive tug of war that's playing out right now in the worlds of tech and finance. Seriously, there are two enormous forces pulling in opposite directions. And figuring out this conflict, well, that's the key to understanding where the market is really headed. And that's really the big question on everyone's mind, isn't it? On one side, you have this incredible, almost unstoppable momentum in digital assets and AI. But on the other, all that energy is slamming right into the hard realities of global economics. That collision is creating some really fascinating and pretty divergent outcomes. Okay, so let's really dig into this conflict. Who or what is actually pulling on the rope here? As it turns out, the market is getting yanked in two totally different directions at the exact same time. On one end of the rope, you've got these powerful macro forces, things like Fed Chair Powell dropping hints about a very careful path to maybe cutting rates, and the entire market holding its breath for the next big inflation number. But on the flip side, you have forces that are completely native to the crypto world itself, that huge river of cash flowing through ETFs, what's actually happening on-chain, and of course, all the big tech upgrades. And believe me, this isn't just some abstract theory. It's creating a very real split in the market, where some of the biggest digital assets are having completely different experiences. Some are just stuck in the mud, going nowhere, while others are absolutely sprinting to new heights. And you want to see the perfect example of this? Just look at the two titans of crypto, Bitcoin and Ethereum. Right now, their stories could not be more different. First up, Bitcoin. It's basically been pinned in this tight little range all week, really struggling to break out. So why the struggle? Well, it's caught on the macro side of that tug of war. With investors' eyes glued to interest rates, the money flowing into Bitcoin ETFs has been choppy, even negative on some days. But then you look over at Ethereum. It just blasted through to a new all-time high, getting super close to that $5,000 mark. It seems totally unfazed by the exact same macro headwinds that are holding Bitcoin back. So what in the world is going on here? The reason for this big split becomes crystal clear when you just follow the money. In August, while the Bitcoin ETFs were seeing mixed or even negative flows, capital was just flooding into Ethereum ETFs. We're talking over $1 billion in a single day. That's not a small shift, it's a massive, clear rotation of capital. And this isn't just random speculation, It's being driven by a concept called the adoption flywheel. All that huge demand from the ETFs is fueling more real activity on the Ethereum network. And that activity, plus new tech upgrades and the ability to earn yield, is attracting even more big-time institutional money. It's this powerful, self-reinforcing cycle. It all boils down to a really simple idea, which one source just put perfectly. Liquidity is chasing that story. The money is moving away from the uncertain macro story of Bitcoin and flowing directly towards the tangible tech and adoption story that Ethereum is telling right now. Okay, but when you have all this new money pouring in, it brings up a whole new question. It needs clear rules of the road. And quietly, in the background, regulators are finally starting to write that all-important rulebook. I mean, just take the conclusion of the super long-running Ripple versus SEC case. With that legal cloud finally lifted here in the US, a huge barrier for exchanges and banks to deal with XRP has just been removed. Bottom line, regulatory clarity frees up liquidity. Period. And it's not just about cleaning up old messes either. We're seeing brand new frameworks being built for stablecoins, which are like the financial rails of the entire crypto world. In the US, the Genius Act is all about proving the money's really there, with reserves and audits. Meanwhile, over in the EU, their MiCA framework is focused on licensing. Different approaches, sure, but they have the exact same goal: create clear rules of the road for money. So why does all this boring regulation stuff matter so much? Well, you can think of these clear rules as brand new multi-lane superhighways for money. They give the huge institutions the green light they need to finally drive their capital into the ecosystem with confidence. Now, this whole battle for control over money, over technology, over access, it's not just a crypto thing. Not at all. We're seeing a very similar power play unfolding right now in the world of artificial intelligence. The huge story here is the lawsuit from Elon Musk's xAI against Apple and OpenAI. The claim that by making ChatGPT the default AI on every iPhone, they're basically creating an unfair monopoly and boxing out competitors. And this lawsuit drops right as GPT-5 is getting woven deep into the fabric of both Apple's and Microsoft's entire operating systems. And this really gets to the heart of the whole conflict. Distribution is destiny. The fight isn't just about who has the smartest AI model anymore. No, it's about who controls the default settings on hundreds of millions of devices. that control over our habits and our data, that is the ultimate prize. Okay, so we've got market rotations in crypto, we've got platform wars in AI. When you step back and put it all together, what's the real signal here and what's just noise? You know, the core signal from this week is really a story of two things: rotation and preparation. Investors are actively rotating their capital, right? They're moving it to assets with the clearest, most compelling stories, like Ethereum. And at the exact same time, the entire market's foundation is being rebuilt and prepared for the next big wave of adoption, all thanks to new regulations. And for those of you watching the markets day to day, the P levels on the chart tell this exact story. For Bitcoin, it's all about holding support at $113,000. For Ethereum, the new battleground is between 4,600 and about 4,950. And notice the difference in the notes there. Bitcoin's fate right now hinges on stopping ETF redemptions, while Ethereum's price is being fueled by new ETF creations. Now, if we zoom out, say 3 to 12 months from now, the longer-term story becomes super clear. 1, the ETF pipes are widening the entrance for all kinds of investors. 2, new stablecoin laws are creating safe, reliable on-ramps for capital. And 3, the big AI platforms are consolidating their power, locking in our attention for years to come. Which, of course, brings us all the way back to our central question. These new regulations are paving the highways for the next giant wave of capital. The only question left is, where is it all going to go? Is it going to chase the macro hedge against the old economy? Or will it be the fuel for these new technology flywheels? That, right there, is the tug of war to watch.